Hello students, today onwards we will be working out 15 marks problem under non-profit concern wherein they will ask you either to prepare income and expenditure account and balance sheet. So now let us see 14th problem, that is preparation of income and expenditure account and balance sheet. From the following 14th problem, from the following receipts and payments account of Arogya Hospital newly commenced on 1/4/2013. So this is a newly commenced business. On 1/4/2013 and the adjustments given below, prepare the income and expenditure account for the year ending 31/3/2013 and balance sheet as on that date. So they have given us receipts and payments account for the year ending 31/3/2013. Receipts as well as payments they have given. Again I am repeating, receipts and payments account include both capital as well as revenue items. In that we have to take revenue items to the income and expenditure account and capital item will go to the balance sheet, and they have given a certain adjustment. Now first let us read the adjustment. Donations are to be capitalized, so go to donations and mark there and keep, put one hash mark so that you will remember that there is an adjustment. So now donations are to be capitalized, otherwise also we take donation as an capital item. It will appear in the balance sheet liability side under capital fund. The government securities represent investment of the endowment fund. That means there is endowment fund in the receipt side. This will appear in the balance sheet liability side because it is a capital item. It is non-recurring in nature. Since it is a capital item, it will appear in the balance sheet. But they have told now the government securities represent investment of the endowment fund. Here we have in the payment size by government securities. Whatever amount here they have in endowment fund, 50,000, that they have invested in the government securities. See, remember this endowment fund of rupees 50,000, the concern cannot use for their financing activities. Because it is given for certain purpose, that fund is made for certain purpose, that amount should be utilized only for that fund. But the interest earned by investing this amount, endowment fund amount in certain securities, that can be used for financing activities by the concern. So what the concern have done, and though they have this endowment fund of 50,000, that 50,000 they have invested in government securities. Then whatever income they have received or they earn in this security, government securities, that they can utilize for their financing purpose. So now the government securities represent investment of the endowment fund. Okay, there is one adjustment for government securities. Outstanding subscriptions, go to subscription, mark there, we have an adjustment. Outstanding interest on government securities, they have invested in government securities, so they have to receive interest on government securities. It's not given here, that's why they have told outstanding, so I have already marked there. Office expenses, outstanding rupees 200. Office expenses, office over here. Okay. Depreciate instruments and equipments and furniture. Instruments and equipments, furniture, adjustment, and okay, stock of medicines, closing stock of medicines is given. Here we have medicines purchased. Okay. Now let us prepare income and expenditure account. In this problem we have to prepare income and expenditure account as well as balance sheet. So now let us first prepare income and expenditure account. I'll use this cardboard so that question will be visible for both of us. Okay. Yes. Now let us first prepare income and expenditure account. So name of the concern, Arogya Hospital, right? Arogya Hospital. Income and expenditure account for the year ending 31/3/2013. expenditure and income. Income and expenditure account is a nominal account wherein we have to take all the revenue items. So now we'll see one by one the item. First item, buy instruments and equipments. It is an asset. Equipment is an asset. Since it is a capital item, it will appear in the asset side of the balance sheet. But there is one adjustment here. That adjustment is nothing but it says that depreciate instruments and equipments at 20%. So we have to provide depreciation on the fixed asset. Here the fixed asset is instrument and equipments. Depreciation should be charged in the income and expenditure account because it includes non-cash items such as depreciation, bad debts, provisions, and also the outstanding items. So first let us write to depreciation on instruments and equipments. What percentage? 20%. What is the amount of instruments and equipments? 40,000. So 40,000 into 20%, 8,000. Next item, buy furniture. Furniture is purchased on 1/4/2012, that is beginning of the year. They have commenced their business in the year 1/4/2012. It is not 13, it should be 12. 1/4/2012 and the closing balance is 31/3/2013. Okay, they have started their business in the year 2012. So the opening balance of the furniture 10,000. On that 10% depreciation. So right, 2 depreciation on furniture, 10,000 into 10%. See, this date is very important because in between if they had purchased, suppose if they had purchased in the month of June, then number of months also you have to calculate here while calculating depreciation, since it is used for the entire 1 year into 12 months. So it is used for the entire year. Further, next item, diet expenses. It is an expense. So 2 diet expenses, no adjustment, the amount is 2,500. Then we have medicines purchased. Medicines purchased 5,200. So write 2 medicines, 5,200. But in the adjustment, we have an adjustment there I've marked here. Stock of medicines as on 31/3/2013 is 700. Closing stock is given. Less closing stock 700. So medicines worth rupees 4,500 has been spent by Arogya Hospital. When they had purchased, it was rupees 5,200 and the closing balance is 700. That means 4,500 worth of medicines they have spent. I'll put a star mark there. Hash mark I have put. Then further, let us see the next item. Salaries to staff. So right, expenses. 2 salaries, 10,000. 2 office expenses, there is an adjustment, 3,800. Right in the inner column, 2 office expenses, 3,800. Now let us see the adjustment there. Adjustment number 5. Office expenses outstanding rupees 200. I have told you all the information regarding previous year and the upcoming years should be deducted and only the information regarding current year should be added. Now all these information are regarding the current year because it is a newly commenced business. So it is of the year 2012 and 2012-13. So it is all this information whatever is outstanding here, it is of the current year. So current year information we have to add outstanding 200. So total of office expenses will be 4,000. Then next item, government securities. I told you government securities is an investment. It will appear in the asset side of the balance sheet. Balance carried down, cash balance and bank balance. Again, both the closing balances will appear on the balance sheet asset side. Come to the receipt side. 2 subscriptions. So come to the income, under income and expenditure account, buy subscriptions. How much is the subscriptions there? 60,000. Right, 60,000. There is an adjustment. Let us see the adjustment. Subscription. Outstanding subscriptions rupees 2,000. So outstanding subscription, current year information, add outstanding 2,000. So it will become 62,000. Next item, 2 entrance fees. Again I have told you entrance fees, either we can take it as revenue item or as capital items. We will, since nothing is mentioned here, otherwise they would have mentioned here entrance fees are to be capitalized, but the question is silent about the term entrance fees. So we can either assume it as revenue item or as capital item. So when nothing is mentioned, we will always assume it as revenue item and at the end we will give a note. So I'll write by entrance fees 2000. Then next item, endowment fund, it will appear in the balance sheet liability side. Donations, it will appear in the liability side of the balance sheet. There is an adjustment. Donations are to be capitalized. If this word was not given here, capitalized, otherwise also we take donations as an capital item. To fees from patients, it is an income, right? By fees from patients, 2500. There are no adjustment. Then interest on bank balance, it's an income. By interest on bank balance, 200. Miscellaneous receipts, by miscellaneous receipts, 300. So we have recorded all the items which are appeared in the receipts and payments account, all the revenue items. Now once again let us check the adjustments. If you have missed any item, we will record it. Donations are to be capitalized. This will appear in the balance sheet. The government securities represent investment of the endowment fund. Okay. Outstanding subscription, already done. Outstanding interest on government securities, this we have not recorded. Now we have to record it. So write by, on the income side it is an income, interest on government securities. They have invested 50,000 under government securities. On that they have earned interest, but they have not yet received. It is outstanding. So write by interest on government securities, 7,000. Office expenses we have already recorded. Depreciation already done. Closing stock of medicines also done. So add income side as well as expenditure side. So in this problem, income is more than expenditure. So we have tried to excess of income over expenditure. That means there is surplus. Income is more than the expenses. There is surplus profit of rupees 44,000. Now we have to prepare balance sheet. Balance sheet as on 31/3/2013. Always remember, whatever information is given in the adjustment, it will appear twice. Okay, now liabilities and asset side. Now let us again see the receipt and payment account, and capital item we will take it to the balance sheet. Instrument and equipments, it is an fixed asset. It will appear in the asset side of the balance sheet. Right, balance sheet. Instruments and equipments, how much was the worth of the instrument and equipments? 40,000. So instruments and equipments 40,000 less depreciation 8,000 deducted. So outer column it will be 32,000. Next item, furniture, fixed asset. Again come to the asset side and write 10,000. Furniture 10,000 less depreciation. We have provided depreciation. Depreciation on furniture is 1,000. So deducted. Outer column it will be 9,000. Then direct expenses was a revenue item. Medicines purchase, they have given already. Closing stock of medicines. Stock of medicines as on 31/3/2013. That means it is an closing stock, closing balance. So write closing stock of medicines or stock of medicines. It is 700. I'll highlight in it. Okay. Then salaries to staff was recurring in nature, revenue item. Office expenses recurring in nature. Buy government securities, it is an investment. So investment in government securities 50,000. On that we have outstanding interest on government securities. Interest is earned but not yet received. So add interest 7,000. So the total will be 57,000. Then closing balance of cash as well as closing balance of bank. Cash balance and bank balance 3,500 and 10,000. Then come to the receipt side. Subscriptions. There was an adjustment. What was that adjustment? Outstanding subscription 2,000. That is, subscription is not yet received. Income earned, not yet received. So it will appear in the asset side. Outstanding subscription we have to receive worth rupees 2,000. 2,000. Then entrance fees, we have taken it as an revenue item. Endowment fund, it will come under capital fund under the liability side. So first we will write capital fund. Under that endowment fund. How much is endowment fund? 50,000. Then we have donations. Right, donations 20,000. Then Fees from patients is a recurring item. Interest on bank balance is a recurring item. It will appear in the income and expenditure account. Miscellaneous receipts also will appear in the income and expenditure account. Now, for this capital fund, endowment fund donations, in case if life membership fees was there, we had to add. In case if legacies were there, we should add all those expenses. So now endowment capital fund will be 50,000 plus 20,000, 70,000. Add profit or surplus which will arrive from income and expenditure account, that excess of income over expenditure. In case if there was loss, that is in case if there was an excess of expenditure over income, we have to deduct it. Profit should be added. So our capital fund total will be 1,14,000. Now, any outstanding expenses, if they are there, we have to take it in the liability side. Outstanding expenses as well as outstanding expenses as well as income received in advance. Here on the asset side, outstanding income and prepaid expenses, we have to record it in the asset side. So now, outstanding expense. We have one expense there, office expenses, outstanding. So outstanding office expenses, 200. So total it, your balance sheet should tally. This was quite easy problem wherein first you have to identify class which is revenue item and which is capital item. Revenue item you have to take it under income and expenditure account, and in income and expenditure account all the current year information you have to add. Previous year and the upcoming year you have to deduct it. But in this problem, since this hospital is a newly commenced business, we will not have any information regarding previous year, and they have not given any information regarding the next year, upcoming year also. So only current year information is given, that's why we have added it. Also in this problem, the investment in government securities was given 50,000. On that interest, outstanding interest on government securities, that is interest earned but not received, interest income is outstanding, that should be added, 7,000. So once again go through this problem, because tomorrow also we'll be working out one more problem, 15 marks, wherein in that question they will be giving us balance sheet, and then we have to prepare, they'll give balance sheet as well as receipt and payment account. From that we have to prepare income and expenditure account as well as balance sheet. With this I end today's class. Thank you.